Hello, my friends. Jake Nicolle here. I want to take a minute and film a video today giving you an update on the latest around the Bank of Canada and what is going on with interest rates. Now, I've had many of you reaching out asking me questions about when is the right time to be selling my home in this market, where do I think the market's headed, etc. Now, while I would love to tell you that I have the crystal ball and I know exactly what's going to happen, I absolutely do not. So, this advice is from my opinion and my perspective. This is not the truth or guarantee by any means, but I think it's important that I talk about this because I'm in an industry where there's a lot of wishful thinking. And what I mean by that is in the real estate and in the mortgage industry, I've heard a ton of banter. And if, by the way, the tone of my voice sounds more serious, it's because this is a very serious, less smiley conversation to be had today. And there's a lot of conversation in my industry amongst agents of all kinds that are very optimistic that the market is going to suddenly turn around by the end of this year and we will see home prices going way back up and crazy, and we'll see interest rates coming down. I do not believe either of those are true. And this is also not to be a fear monger or creating fear for the sake of creating fear, but it's because many of you have had me in your homes. We've had these conversations one-on-one. And I think it's time that for those of you who I haven't had a phone call with or met with in person and discussed your strategy and your plans around what to do with your probably your biggest financial asset being your home, I want to break it down today. Okay, so first things first. About 8 hours ago, you can see this story came out, and we have had another rate hike from the Bank of Canada. Now they've raised it 25 basis points, which means 0.25%, bringing us up to a Bank of Canada rate of 4.5%. Now, couple interesting things. Number one, I've got some notes here to reference as we go through. So 4.5 is what's known as the key rate. And then what happens is the banks, such as RBC, all the major institutions, they lend from that number. So I'll show you more of my notes in a second. But the main thing you need to know is when you see rates like this from RBC, you can see that they have to make money on top of borrowing money from the Bank of Canada. So they're borrowing money, and that rate that the Bank of Canada sets is what RBC and other institutions then loan money on top of. So you can see here the rates from RBC today for a 5-year fixed in blue and a 5-year variable in pink/red there is 6.25% and 5.69% respectively. Okay. Now, when we take a look at this 4.5% key rate from the Bank of Canada is the highest Bank of Canada rate since 2007, and it's 16 times higher than a year ago. Okay, so really good perspective is how much higher it is than the key rate from a year ago, and that's quoting Polyev. And today, Wednesday 25th, marks the 8th consecutive time that the Bank of Canada has raised the cost of borrowing. Now, a couple things from this article. You can go, I will provide a link, you can read it yourself. Here's some of the things that stood out to me. It's a rather short article, so I'm quoting the majority of it. I'm not leaving out anything key. But the things that stood out to me is that Tiff McClem mentions here, he's the Bank of Canada Governor, that we've raised rates rapidly and now it's time to pause and assess whether monetary policy is sufficiently restrictive to bring inflation back down to its 2% target. Now you can see down here, inflation cooled off from 8.1% in the middle of 2022, and they started raising rates in July. It's not when people think they started raising rates. And what I mean by that is we'll look at some of these stats in a minute. You can see the market started to taper off just at the announcement of rates changing. And I have multiple thoughts around this that we'll discuss today. But the main thing that you need to know is that the Bank of Canada, my takeaway from this, is that they've raised rates rapidly, and now they're going to pause, like he just mentioned here, and assess whether or not them changing all these rates is going to bring inflation back down to its 2% target. Now, this is the most important thing. Even this article signals end of hikes. This is a little bit misleading because they're not signaling anything. Here's what they're saying. So the Bank of Canada Governor, he added that this hold is conditional on whether the economy continues to develop according to its forecast, and Tiff McClem made it clear that additional hikes could be in the cards to get inflation back down to the 2% target. So we mentioned that inflation dropped from 8.1% in the middle of 2022 down to 6.3%. Remember though, their target is 2%. And the way to think about inflation is it's like a teeter-totter. They use interest rates, so they'll raise interest rates to try and bring down inflation. They make borrowing money more expensive to cause people to slow down on all their spending, because back in 2020, when this global pandemic swept the world called COVID, we decided to print a bunch of money, which meant money was much more accessible. We then decided to also lower the interest rate, making borrowing that money even easier, and everybody ran out and spent all the money and pushed up the prices of everything, especially homes. I mean, you just saw a minute ago, this was the peak of what happened from us printing money and allowing interest rates to be so low for so long. Okay, now on top of this, as we kind of keep going through here, is we can see here he continued. So the Bank of Canada Governor Tiff continued. Inflation is still over 6%, and yes, we are certainly seeing clear evidence that inflation's coming down, but we do have to be humble. There are a number of risks out there. The pause on interest rate hikes could end if the bank starts to see an accumulation of evidence that inflation and other economic indicators aren't heading the way policymakers expect. Asked by reporters whether the interest rates could start to decline, the central bank governor pushed back on speculation amid money markets that a rate cut is coming before the end of 2023. It's far too early to be talking about cuts, he said. So the reason I'm shooting this video is I've had quite a few conversations where there is this false hope that by the end of the year, rates will start coming down and real estate prices will start shooting back up. And the challenge is we had such a long period of time where prices of homes continued to go up so steeply for so long that we feel like it's just a matter of time before that starts happening again. But here's why I'm shooting this video. We can see the price of homes. This chart, by the way, is an all-time chart. We're tracking home values all the way Southern Ontario, okay? Everything Mississauga all the way through Oakville, Burlington, Hamilton, into the entire Niagara region. This is all the price ranges, all property types, all sizes, all sales, okay? Since 2009. And we see this progression and this development where the markets continued to go up. And then we see this hockey stick-like curve of growth that is exponential, okay? So this definitely needed to cool down because 20% year-over-year returns turns you into Warren Buffett over a long enough period of time. And that's the level of growth that we were seeing in our real estate market, which is unsustainable, okay? So looking at this, we see that prices were going astronomically high, but the reason they're going up so much is not just supply and demand. We know that here in the GTA, we have a housing crisis. We do not have enough homes for the number of people that are becoming home buyers and looking to get into the market and needing a home in the market. This is why we're pushing forward acts to allow people to do things like develop on their property to add another residence, and we're removing the red tape, so to speak, to allow people to create more living space. But here's the main reason we see these prices going so high. It's not just supply and demand, it's this right here. We had a period through 2020 where we saw rates coming down lower and lower and lower. And when rates get super low, it's that teeter-totter effect. When you make rates really low, it causes inflation to go up because people take that money and they overextend themselves. Now, what's happened during COVID since 2020, since March 2020, is we've seen the access to capital become easier and easier. And as that access to capital became easier, people overexerted themselves and began speculatively investing in all kinds of assets. And homes became an asset class where people were investing money, flipping houses, and I'm sure you know someone who's done this, flipping houses within a 1-year period or a 6-month period, and putting lipstick on a pig with a house and then selling it for more money and riding the speculation wave. Now, we've all got friends who've done this, and we've seen this happening. But I'm sharing this because there's this idea that at the end of this year, suddenly home values are going to go back up again. But guess what? The reason home values went so high is because interest rates were so low. We just read together an article of the governor of the Bank of Canada not only saying that, and let's just read his exact quote again together, okay? Not only did he say it's far too early to be talking about cuts, but if you truly believe the fact that we are trying so hard to get inflation down, if you truly believe that suddenly we're going to lower rates this low again in order for house prices to go this high again, then I don't think you understand the economic implications of what we're trying to achieve right now by raising rates so high so fast. So we made money incredibly cheap for people. We were surprised at how fast that caused inflation to go up. So then we began raising rates to try and combat inflation. What we need to do now is we need to get our interest rates down to a level that is sustainable over the long period of term. And that's probably something like a 5% interest rate over the long term. Now, take a look at this. If I go Canada history interest rates, okay? And you can go Google this yourself, all right? Let's take a look at this. And I'm just clicking on a random one, so I didn't fact check any of this, but I want you to just take a peek, okay, at what's going on with interest rates over the long term. And what you'll notice if I click on pretty much any of these, you'll see that interest rates in Canada always kind of sat around 5% as a more recent history figure, okay? And you can see that there was a crisis in the 80s and 90s where interest rates reached a crazy high because of the fact that inflation was running away and we raised rates very, very high. And there was other factors, but that's just one of them. So the belief that we're going to suddenly lower interest rates again in order to satisfy investors out there and people that have overextended themselves is unfortunately not what I believe to be true. So what I believe is going to happen is we will, if we're lucky by the end of this year, and I don't even know that it's lucky, just the reality of by the end of this year is that we would see no more rate hikes and we would see maybe interest rates very slowly coming down. And when I say very slowly coming down, I mean exponentially slower than they just went up. So maybe they go down 25 basis points by the end of the year. Or maybe it's just flat by the end of the year. And maybe it slowly comes down until it reaches an average interest rate of, let's say at the Bank of Canada, 3%, which means the borrowing cost is still going to be 4.5%, 5%. Okay, so maybe it comes down a little bit from here. Right now, let's say the 5-year fixed is 5.7%. Maybe we see that down to like 5% or 4% over the next couple of years, and it just sits flat. And I know that that's really scary to hear, but I'm trying to be honest with you about the fact that if we just make interest rates really low all over again, we create this cycle. We will be back in the cycle where we'll be creating the same problem, perpetuating the same problem, making money too affordable for everybody to borrow. Everybody runs out, borrows a ton of it, buys homes they can't afford. Then we realize inflation's running rampant. Then we got to raise rates all of a sudden. It will become this cycle that we don't want to live out. And if I'm also being honest, this is a cycle that we've seen before, okay? Interest rates were low here. They started going up. They went up really high. Do I think they're going to go that high again? I sure hope not. That would be a ton of people underwater. We're already seeing people at their trigger rate, which you can Google what that means. And essentially, we have people that are already underwater on their mortgages, meaning they borrowed more money than the value of their home now. And the bank is going, we want you to pay the difference, okay? To get us back to a place where we're safe having lent you that money. So this is my quick take for you guys. And I say quick take, this has probably been a 5-minute video. This is a ton for us to cover and dive into. And this is really just a quick explainer from my perspective on what you need to be thinking about when you're making judgment calls about, should I be selling right now? Should I be waiting? Now, the last thing that we're going to dive into and look at is this chart right here, which I think is really important for you to understand if you're a buyer or a seller. If you're in the market planning on making a decision, this is something I want you to be thinking about. So this is actually a little bit of a recent discovery for me where I started to spend a lot of time looking at a much longer time horizon of market statistics, because sometimes you get too close, you mistake the forest for the trees. And what's fascinating here is if I scroll down and we click on new listings, okay? This is saying the number of new houses that are being put up on the market. And when I say new, I don't mean like a 5-year-old, like a new house. I mean a house that is newly listed, okay? So a house on your street gets listed, that's considered a new listing. Doesn't matter how old the house is, just as a caveat. Here's what's amazing about this pattern. if you look at this, this is like the heartbeat of the market, okay? The market literally breathes, it expands and it exhales. It literally breathes and moves. And what's amazing is every single December since 2009, and I'm sure prior to this, we see the lowest number of homes being listed on the market. And it makes sense because the couple weeks leading up to Christmas, nobody really wants to list their home and the market's very quiet. So because of that, like Christmas, and then we know 1 week from Christmas is always New Year's. Because of that 7-day period and the week leading up to it, we essentially have 2 weeks of very little activity, which means every single year, as you can see here, December has the fewest number of listings. Now, if you are a home seller and you have a home for sale and you're thinking, how do I make sure that when I sell my house, I have the least amount of competition? Meaning that if there's buyers out there and they have to buy, wouldn't I want to sell at a time when there's the fewest number of homes that I am competing with? And my answer would be, that's exactly what you should do, which is also exactly why I sold my home 1 week and a half before Christmas. And you might think, Jake, that sounds absolutely crazy. But guess what? We're in a buyer's market and I sold my home conditionally in 3 days. And then the people that asked to buy my home, they asked me to represent them in their sale. So it made sense for me to take on the risk of accepting a conditional offer. And their house sat on the market for 3 weeks. Christmas weekend, New Year's weekend, and the very next weekend after New Year, we held an open house and we sold their house in like 3 days from then, okay? Or we sold it the next day after the open house. My point here is this. You want to be listing and selling your home when there's the least amount of competition. The worst time that you can sell your home, from my perspective, is when everybody else is on the market, because it means the market is flooded with options. And yes, you're thinking to yourself, but Jake, doesn't that mean that there's like probably also more buyers out shopping around? Yeah, for sure. The truth is there's always a ton of buyers in the GTA shopping around because, remember, we have a supply crisis. We don't have enough supply of homes. The only reason homes have been pooling up right now and not selling is because this right here. People can no longer afford the prices that sellers are expecting. And what's going to happen is this. Sellers are going to start adjusting their prices to accommodate the market. Buyers are not going to start raising their offers to accommodate the prices sellers want because they can no longer afford to do so. They're not going to pass the qualifying tests because remember, when the bank tests you, they have to test you above and beyond the fixed or variable rate. And they're going to be testing to see if you can afford not 5.69% or 6.25. They're going to see if you can afford 7, 8, 9%. To make sure that their money is safe in case rates do go higher and to make sure that you pass that qualifying rate. Okay, so as we're looking at these market stats, here's the big takeaway. Every single spring is when everybody lists their homes, and you can see the market peaks with the most number of new listings. In 2009, it was April, okay? And then pretty much every year after that, in 2010, it was April. Pretty much every year after that's going to be May. Okay, so 2011, you can see it was May. It peaked 2012, May. 2013, May. 2014, May. Okay, keeps going. May every single year, all the way until March 2020, where we see it peaked in March. And then April, it dropped down. And then again, June now is when we saw a spike. But this year right here is an anomaly. This is like your heartbeat kind of skipping a beat because the whole world is in a pandemic and they're freaking out a little bit. We're not sure what to do. And then you can see there was a giant recovery where everybody realized, wait a minute, this low inventory caused prices to go up. And then everybody's like, hey man, maybe I should actually sell right now, okay? And then this year still, December was the lowest. And then you can see the year after that, 2021, March was the high point. And then you can see we're back to May. So in 2022. So this year, I'm anticipating it will be another year where May will be when the most listings hit the market. All of this is to say this. If you're a buyer and you're thinking about when would be the best time to buy, the best time to buy would be when the most number of homes are on the market because you're going to have the most options. And you're also going to have the most ability to negotiate and decide what you should be buying. The most inventory for you to choose from, and the highest likelihood that if you're a cash buyer in the market, you'll have tons of leverage. My recommendation to you, if you need to buy and sell, is to sell first, which is exactly what I did. I just sold my home, like I mentioned, in December, okay? And it went firm at the beginning of this year in January, like January 3rd or 4th. And I have a closing date all the way in April, the end of April. So guess what I'm gonna do? I'm gonna wait as long as I possibly can, and I have an extra port of 90 days that I can add. So I don't actually have to buy in order for me to keep my current mortgage with the bank and not have to pay a penalty to cancel it. I don't even have to buy all the way until like June or July, okay? So that's given me a ton of leverage because now I can ride this out and see where this is all gonna go, which I can tell you where it's gonna go. There's gonna be, in May, a ton of homes on the market all the way leading up into May. You can see even March is when it starts to go up pretty massively, right? March, you can see March. You can see March is when it's like really 50% of the way to its peak of inventory. And I'm gonna wait and I'm gonna let the prices continue to come down a little bit because now, even if we've flatlined our interest rates, what's gonna happen is the inventory of homes available is gonna start to go up and up and up. And when that goes up, there's more supply on the market and the demand isn't gonna change very much right now because even though people do need homes, remember, they can't afford what they could afford before. So prices will come down. And to add a layer of complexity to this that I don't have the answer to right now, we do not know what's going to happen with all the people that when April, May, June rolls around, there are many people that can no longer afford their homes. And we haven't seen the weight of that yet. And I'm getting those calls, guys. I'm getting people calling me saying, hey, Jake, unless interest rates come down and house prices start to go back up, I can't afford to keep my home. I can't afford the payments. And I also can't really afford to sell my home because I didn't buy it all that long ago and I'm like underwater with equity. And there's going to be a very complicated situation because those people will be forced to sell. And when they're forced to sell, they'll drive the price down because they're now in a desperate situation. And it'll mean that sales will get drugged down by all of that pressure from people being forced to sell at lower prices. It'll pull all the comparables in the neighborhood down. It'll keep pulling the market down. So this isn't to sound opportunistic or doom and gloom. It's to say, this is what's going to happen from my perspective, my opinions. Again, I don't have a crystal ball, but when I look at all these pieces of information, I look at interest rates, I look at inflation, I look at supply and demand in the market. This causes me to believe that the trends that I just discussed today will likely be the trends. Now, the last thing to mention, if you are strictly a seller right now and you're deciding, should I sell now or should I wait till the end of the year to sell? My recommendation would be to sell sooner than later. I think that the best thing you could do is sell sooner rather than later because I don't know what the future holds. But what I do know for sure is that many of you probably have still a very strong equity position in your home. And you capitalizing on that today is still a great idea. You're still going to walk away having tons of equity in your home for many of you. And with that being the case, I would say capture that equity now before there's the potential that it becomes less. Will it become more 5 years from now? I think absolutely certainly. And absolutely certainly. What I mean by that is this. If we look at sale prices over time, pretty much every 5-year period, you're going to be net positive on your home purchase. You can see April 2017, the average home price in the GTA as a total average across all classes of homes, sizes, everything else. You can see it was 2017, or sorry, it was 420. We hit that number again, like just a year later, right? April 2017 and September, the market was already back up to that price. So my point here is that over any given long enough 2-year, 5-year period of time, you'll be above that figure. Now, I don't have the historical numbers here to show you what happened like the 80s or the 90s, but I guarantee you there was probably quite an extended period of time where house prices weren't going up a bunch. And there's the reality that that could be the case, or house prices could continue to decline for a little while if there's tons of people underwater, and that causes, if affordability is not changing with these interest rates and people are underwater, this could push down prices further. So here's my take on what to be expecting when it comes to where the market's at. There's a lot of other information. If you've got questions, concerns, thoughts, anything that you'd like to share, pick up the phone, give me a call, 289-216-6852. My contact information is below in this video as well. And additionally to all of this, what I would say is at the end of the day, make decisions based on what you know to make sense right now today. If you're speculating that the market's going to go up, I believe that that is not going to be the case. If you are and not going to be the case in the next 12-month period. I believe if you're waiting for your property value to go up, it could be as much as 24 months before we really see prices start to go up again. And there's a lot of variables, and I don't have all those answers. Guys, I could be wrong about all of this, but I just think based on the position of the Bank of Canada and inflation, this is going to be a little bit of a long haul here. This is not going to be an overnight thing. We're not going to see prices just suddenly shoot up again out of nowhere, okay? So that's my take. If you've got other thoughts, if you'd like to see me break down some of this other data, we do have videos on our YouTube channel that are a little bit faster paced. This is quite a conversation with you today, but I think it's important for you guys to hear this and hear my full breakdown of where the market's at. So God bless, guys. I'm wishing you the best. Again, feel free to pick up the phone and give me a call. And if the phone's busy, just try it again. We'll get back to you once we have a chance. It's busy these days. I've got my phone muted. I'm sure I'll get to the calls once I'm done the video here. But pick up the phone, give me a call, leave me a message if you don't get me, and try me again. We'll get a hold of you. Looking forward to speaking with you, my friend. Be good, be safe. I think right now we're all getting a snowstorm here in the GTA. So I'm wishing you peace and love, my friends. Have a good day. Cheers.